Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat that you can hear me. Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat that you can hear me. My name is Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat. Email. Hear me. My name is Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat. Email. Hear me. My name is Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat. Email. Session. Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, please type in the chat. Email. Session. Good morning, everyone. Sound check. 1, 2, 3, 1, 2, 3. If you can hear me, I want to look at the open position, and one of the open position that I have is one that we put in just recently on the May 24th. Then I want to go over some of the tools that we have on our Trade Active planner, and I will then finish with the big picture. So it's a little different than a live session. And if you're good, hi Jeff, good to see you. I would like to first start with the open position that we have. So this is in my opinion the page that it's not being used very often. So you go here, trading with the unfilledorders.com/Josip, and then you look at the notes from previous sessions that we had. So if you enlarge this, you would see this is a trade that we have placed on the last session. And if you scroll down here, I actually break down the whole explanation of this trade and how everything went around. So what I like to do now, I want to point out to you that we place this bear call spread, and it involved the strike price is 29 as a buy and 27 as a sell. And I'm going to pull up the platform, and I'm going to see where is the price action in relationship where this thing was when we got in at the 25.30. And I'm going to now just get rid of these slides here because I no longer need those slides. And we will see here when I load up the page of the options with options that we have a position on VTS that we place when the price was at the $25.31. So when VST was at $25.30. Okay, I'm going to just kind of type that in here. So our entry, and I'll just create this in such a way that you would follow it. So our entry versus now. So now we're at the 26.30. Now at the close, I mean, like a market is closed, so that has moved the $1 away from our current price action. So when we look at the bigger picture here on the daily, what we have done is we purchase the call and we actually finance it with the bear call spread. We purchase a call and we finance with the bear call spread. And one of the ways that we did that was just very simply that we actually looked at the open interest. And wherever the greatest open interest was, that's where we actually went ahead and we selected that thing. So we have selected that thing based on the fact that we were looking at the open interest. Now, another way to look at the open interest is simply to click right here at the chart where we have an option value map and see it visually where this thing is. So just give me 1 second. I'm going to pull this up on a daily. I'm going to open up the chain, and I'm gonna go back to that particular trade that we placed. It was on October. So if you're seeing right here, this was October 21st. October 21st, there was a huge activity that was taking place right at that area. So when I go over here, expiration, and I select October, and I look up on the call side, and I look at what we traded, this is what we ended up trading. We ended up trading this particular, let me draw this line a little bit better, and I'm going to draw it in yellow because it stands up better. It was a 2,698 contracts of the calls, and then we have protected ourselves with the 29, which was a higher. Well, now that we know that the current price is at 26.31, we are still fine with this bear call spread, right? But this is just one part of the trade, because other part of the, good morning, Mark, good to see you. The other part of the trade is what we have done with the long position. So with the long position, what we have done here, if you take a moment to read, that we were selecting non-directional trade, and we are financing it with the bear call spread, right? So what really happened here, that we saw that the big institution was showing up the activity at 22 put, and we were able to sell that for $1.10, and that has reduced our margin from $2,200 minus that 110 to 2,900. So now that we have evaluated that our bear call spread is still not being threatened, because the price is still below the $27, because that's exactly what we did. Our bear call spread was at 27 dollars, and we are currently at 26.30. So our bear call spread is fine. So be aware of it, that we have on a VST the sold put at 22. So if you have a sold put at the 22 and the price has gone up, that's mean that value of that sold put has decreased. So initially we have sold that put at $1.10, and we're going to evaluate what is the value of this thing right now when price has moved the whole dollar up. Well, that's actually easy to figure that out, because you just need to know what the delta is, and when you subtract the delta from it, you will see that that's the case. So when you're looking right here, I'm showing the 3 strike prices, and because the price has moved from where we had entered at originally 25.30, right? So then 22 strike price was showing, but right now, because the current price is at as you can see, at the 26.31, it exactly moved $1 higher. The 3 strike prices here just doesn't cut it. So what we would need to do here, we would need to change the strike prices from existing 3 to existing 4 in order to show where our 22 is, right? So right now, the 22 is showing that it has decreased to 80 cents, right? So we went ahead and we actually sold at $1.10, 22 put. But what is happening right now, that 22 put that we initially sold for $1.10 has decreased to the value of the 80 cents. And when I said it is a functionality of the delta, if the delta is 20, and when you subtract from original entry 20 cents, this is then the value of what the bid is. So let me just now explain this one more time. When we have sold to open, that $22 put at $1.10, delta was 20 cents. Now the price has gone up. What you're doing, you're subtracting 20 cents from the delta, and that's supposed to bring it down to 90 cents. So the mid price right now, it's a 90 cents. Never mind that they're explaining on the they're showing on the bid that it's 80 cents. This is a mathematical calculation, and as you can see right here, the delta is 20. So one more time, I'm going to just make sure that this is clear. So if I have any question about it, please feel free to type it in. We only made on that $1 move whatever the delta is, So if that's clear, I'm going to move on and look at another open position, and I'm going to then talk about these other things that I want to talk about, such as tools and the big picture. So another trade that we have open that is still in existence is a trade that we did not on May 24th, but we did it previously, and that is a trade on just refresh this page one more time. So when it loads up, so we had a session on May 24th, we traded the VST, and then on May 22nd, we traded Valero. Now with Valero, what we did here, we had a directional bull call spread, which was financed with the bull put spread, and that bull call spread was costly, but we did the bull put financing, so we were able to get more money for it. So over here we have a explanation how we are actually able to get the $32 of the credit. So now we're going to evaluate whether or not that is doing well, and one of the ways to do that is to bring the platform in. So when you're looking here, Valero on a platform that we have used to execute this, is showing that it's actually up $212. Now let me just change the color maybe in the blue and point out to you that VST trade that we just looked at, it's showing a loss. And you're like, well, wait a second, we're supposed to make money on it. Yes, but we're making money on one of the two legs. And one of the two legs that we have is actually sold put. So when I open this up, you would see over here, we have that put that we sold, and that's the one that has decreased, just like I pointed out to you, to 90 cents. But because the price has gone up, but it hasn't crossed the 27, the bear call spread is now appearing that it's becoming near the money or at the money. So just be aware of it. That's the current situation with this. With the Valero situation is different, because from where we got in to where we are now is different. So having evaluated these positions on my agenda, I have a next thing that I want to share with you, and that would be the tools. So I'm really excited to talk to you about the tools that we have here, because one of the things that we can do is use the option and a volume map that is really powerful to look at. So what I'm going to do now, I'm going to almost like be explaining the platform as if this is a lesson about the platform. So when you go over here to the platform and you pull up the diamonds that I have open here, because I was looking at the monthly just before we started the session, I decided to add the study to it. And one of the ways to add a study to it is that you are now switched to the time frame that is daily. Then what you do, add study, and when you go down to the add study, you have this option volume map, and it's a patented. So when we click this, it has set up to show the volume, and that's why it's called volume map. But also we can click it to the open interest, which I personally find that it's very, very valuable. So what I want to explain this to you just kind of visually, and then we're going to do it together. This volume map is also open interest map, and it's patented. To add a study, you would simply click on it and then insert it at the open interest map. And it's easy to switch to click the date. So first line right here that populates, it's a calculation model. So we have by default setting on the contract volume, and if you switch to the open interest, like it's a second line below. Then down here you have what do you want to display? You would need to put the check mark or not. Be aware of it that the volume that populates by default setting on the black background, it's going to have a blue for a calls and red for a put. When we get to open interest, it's going to be different. So here I have taken the snapshot from a diamond just before I started the session, that due to the fact that I'm looking at the volume, the calls are in blue. And when you're looking over here, here's a huge volume activity on the put side, which is 1,862 contracts. And we'll come back to that and elaborate this in a moment, because the market has gone up and everybody's thinking all is clear, but that's not the case, and I'll make my reason behind visible to you in a moment. But I want to point out to you, when you are at it and you select the contract volume, default setting is to show blue for a call and red for a put. Now, when you do go to the open interest, then it's a different color. Now, I know these different colors are kind of like funky, they show for the open interest, the calls are green, and for the puts, they're purple. Now, be aware of it, everything is customizable. So the way how this is built in such a way on a Tradactive platform that you can change this to any color you want. And I'll use the ones that are present here and just kind of explain it to you that that's the reason behind it. So this is an option chain that is displayed on a chart. So when I insert this right now on a diamond that is on a daily, and I apply it and I click OK. And when this thing gets populated, be aware of it that right now what I'm showing to you is the volume. And as I pointed out to you, the volume is showing this huge activity right here of the 1,862 contracts. And if you line this thing up with the current strike price, which is 3,300, you need to ask yourself, why would anybody want to trade more puts than a calls if the market is up? And here I'm already switching a little bit into the big picture. And please give me a feedback if you're following what I'm trying to say here, because on the big picture, it appears that we are really going up. But what really is important for you to understand, that we are coming right here into this resistance and we are still below it. So there's a high chance after this uptrend has been broken that we hit from the belly side head, and then we actually ended up turning lower. And in order for me to be certain that we are really heading lower, the institutions supposed to be having the footprints. And I'm showing to you right now, there's a huge activity right here on the top. Now, what I'm going to do next is I'm going to simply click on single click on the volume, and I will get the premium pricing. So be aware of it. Now I still am looking right here in this area on that particular contract, which I'm going to entertain here in a moment. I just want to make sure that I change this in yellow so you would kind of follow my logic. And I know that the price of that is $8.10 right now. And I'm saying right now because the market is closed and we have a certainty that that's $8 and a 10 cents on the put side. That very same strike price, which is the 330, is on a call side worth $10.38. So if we were about to, for instance, I'm just throwing this out, sell the put for $8.10 in order to buy the call, which definitely is not what I want to do, then be aware of it that there's not enough put premium to pay for my buying of the call. And that's for the regular July 15 expiration. So to make this a little bit more obvious, I'm going to pull up the July 15 expiration and I'm going to get rid of all this other information and I'm going to reduce the strike prices to only one because that's the one that we are looking right here. And this is exactly what we are talking about. This particular thing is what I'm focusing on this morning. And I want to say to you that having the access to this information on the chart, it's such a blessing that you actually know what is really going on. So watch here. This is where we got this 1,862 contract of the volume. I'll talk about the open interest a little bit later. And on the call side, I have a 490. So the point that I'm trying to make is following. I'm going to just take a snapshot of this. So when I drag it in and put it in a Word document, it's going to be so much more clear what I'm trying to emphasize here. So we're now talking about the tools, and I'm going to put this right below the tools, and you will be aware of it that we have 1,862 contracts of the 330 strike price, and we have a 490. Having said that, I'm going to just float this for a second, and I'm going to zoom in right here. That's the information that you get here when you single click. Now, single click on it, it says a price, single click, it says a strike, single click, it says a volume. So there's that 1,862 contracts and 490 that I have shown to you. Now the question becomes, what can you do with that? So I'm going to give you a moment to type in a chat box. What do you think we can do with that information? It's a valuable information, but what do you do with it? You know, I was talking with Jose the other day and I said to him, let's say you go to the Las Vegas and they have a brain surgeon conference there, and the door of that brain surgeon conference is left open, and you are happening to be passing by that conference room and you wander in. And now you're basically crashing a conference for the brain surgeon expert. The question becomes, yeah, you didn't pay for it, whatever the amount is, but what can you do with that information? This information that I'm giving to you, if you're an option trader, it's extremely valuable if you know what to do with it. And one of the things that we need to know what to do with it is to look at the daily chart and observe what the price action has done. Without a red day, we have gone up Friday, Thursday, Wednesday, Tuesday, Monday. So we have put the bottom in last Friday and we had rally, and everybody and their uncle is looking to the left saying, oh, we broke this major high, therefore it must be that we're gonna go higher. But what they are missing is what I have drawn right here, this blue line, and this blue line is actually drawn on a monthly, and it was a support that got broken when the price has gone down, and that old support now becomes a resistance, and we're just about ready to hit it. And what some of the put buyers are doing, short term, they're already buying a put because after such a big move up, there's a high chance that the next move is going to revisit somewhere in this section. somewhere in this section. Now, I don't know exactly where in this section, but there's a high chance over the next several sessions that we're going to move down. Now, when we move down to, let's say, 320, okay, let's say we move down to the 320 area. What do you think the value of that 330 that is right now costing us $8.10 is going to be when we move down? It all depends on a delta, correct? So if it all depends to the delta, then I need to say to you, you can simply calculate, and I'm going to just clean this up so I can bring in the document here that I've been working on with you and explain to you that if we have a diamond that is currently trading at the $330, that's mean 330 put is at the money with the delta of the 50 cents. So if we know that somebody or institution is buying the 330 put, and I'm going to emphasize that this is July 15th, so don't think this is like expiring like on Tuesday when we open, because obviously we are closed on Memorial Day. And the pricing of that, and I'm going to just stick with the price that it says 810, although that's the last price, but I'll stick with it, 810. If the price drops down to 320, okay, within a short little while, that would be the 10-point move. So if you have a 10-point move and we have a 50 delta, 50 cents delta, what would that be? That would be additional $5 that would get added on the top of the 810, not counting all other components such as gamma, vega, theta. But be aware of it, another component that is going to be working in our favor if we just buy the straight directional put at the money is, and look at if I add the 5 on the top of the 8, I'm getting $13.10 profit for something that we have entered for $8.10. So that's mean we made $5 on the top of the investment of the $8. This is amazing, and we are not alone in that trade. There's a huge amount of activity. Now, of course, we can verify: is the same thing happening on a SPY? Is the same thing happening on IWM? Is the same thing happening on the other product? But now that we know this, like we can revisit the chart and walk through the big picture and then come back and use this. Now, this is just using the volume. Most of the time when we do the live session, I look at the open interest, right? So to look at the open interest, I just want to finish this discussion on tools. What we would do up here where it says a date. So before we were clicking to change this from a volume, single clicking, to the price, which is really, in my opinion, premium, because when I'm teaching most of the time, I say to the students, the word price means physical underlying. The word premium, unless you're in insurance business and then it's insurance premium, in option universe, word premium means premium of options, and simple as that. Now, we use the word price here, and I just kind of make it simple because what is the current volume of that option contract on a call side versus what is the current contract value of that option on the put side. And this really, when I look at this, I use the word poking my eyes, which is kind of like a very descriptive, but the bottom line is, why would there be only activity on this and no activity? Well, then you can say, also, you didn't show enough strike prices and all this, but the greatest activity is always at the money. If the greatest activity is always at the money, only thing that you need to picture is a question: do they really believe that this thing is going to go higher? And if it goes higher, that they are then doing this, which means selling the 330 put. Do you really believe that they are doing this after the price action has moved virtually up for 6 days? Because when you look at right here, 6 days we've been going up straight. Now look at the chart historically. Do you see anywhere that we've been going up 6 days straight? Anyone? Well, 5, but you need to count also this Friday as violent reversal of the low. So from where we are here, low to the close, that is already considered bulls winning, because the bears had a chance to push it all the way to the bottom. And then who stepped in last 45 minutes, right? 45 minutes. The bulls, and they stepped with vengeance. They really took it up hard and very hard. Let's see if I can do something here. I trade every single day. I trade for a living, and I can actually pull up that particular day was a Friday. And on a Friday, when we rallied, I actually took a snapshot of how violent this move was. So what I'm gonna do here in a moment, I'm gonna in this discussion bring in the snapshot of where did the price close on that Friday, and watch this. When did recovery take place? This is that day under discussion, which is a Friday, May 28th. So if you're looking right here, it says May 20th. That's the Friday. And we ended up closing flat. Now, if you're recognizing the Dow Jones at the time was down close to 400 points. NASDAQ was down quite a bit. SPY was down quite a bit. And look at, to have a recovery from 3820 to 3900, that's a 80 points move to the upside that has taken place within I would say last hour or last whatever 40 minutes. So I hope this picture is that yes, Joe, I understand your say 5 was pointing out for the delta 5, not only for my discussion, but what I'm trying to point out to you is this discussion that although on the chart this particular bar appears as if it is a red bar, and it is a red bar in the context of what is taking place, right? Because when you look at from where the price has closed to where it has opened, this is where we open and this is where we close. It deserves to be red. But who won in this case? The bulls. And they have set this thing straight up to this particular resistance that everybody's feeling now good over the Memorial weekend, and they can't wait for a Monday to come in, or not Monday, Tuesday to come in and to place the more longs. And little do they know that they're placing the more longs at the wrong location. It's all like this is that fear of missing out, FOMO, as they call it, fear of missing out, right? FOMO, oh, I got to get in, everything is up, everything is up, everything is up. When in reality, you're looking at this and say, like, well, this has made the rip to the upside, but there's a high chance, that this whole thing in the current environment is going to go down. Let's look at historically. We had the 1, 2, 3, 4 days up, and then we pause. We have 1, 2, 3, 4 days up, and then we pause. But this move, basically from this low to this high, it's too fast, too far, and it's unsustainable. Yeah. Plus, I like what the Joe typed in. We have a gap. There's a gap right in this area, and then there was a gap yesterday. There was a gap yesterday. So be aware, this is just one ETF that I'm looking at. I want to now move on to the other ETFs and look at the other ETFs. So the one that is a general measure of everything. I'm sorry, I just want to hide this, so we get the more real estate on everything. I'm going to enlarge the SPY over here, and then you will see when I float and I have more room to discuss this. Similar situation. Blue line represents that low that we had back in the March of 2020, and the Fed stepped in and started printing the money, and We just went straight up. Then January we had the pullback. Then February 24th we created a low. March we bounced. April we came down to those low, but we didn't break them. We broke them in May, went lower, and currently, due to the last few sessions, we did not close at the lows for the May, but we closed pretty much at the lows of the February 24th. Now, honestly, if somebody asks you and looks you straight in the face and says to you, is this the bullish sign that we are closing at the low? You will need to take a moment and think about it. This before was a demand zone of which we bounced hard in March. Next time when we came down to it in April, we were saved by the bell that April ended. And then in May, we tried to go higher, hit that same level that I have drawn before, and went lower. The fact that we are right here, Joe is asking me, are those shorts being covered? What caused this crazy rally up on a daily is a short covering. Because this is a one thing that I want all of you to be aware of it. And when I say all of you, I mean I'm going to draw the line that everybody was saying it's a downtrend. And that downtrend has a three touches, 1, 2, 3, right? Recognize 1, 2, and 3. And on Wednesday night into Thursday night, price action was not able to break through that level. Think about, I don't know how many of you study history of the D-Day, Second World War. I'm going to give this as an example and I'm going to jump right away in the market. So from the UK, our troops with Canadian troops and Australian troops and the British troops are trying to land in France. But you have those cannons from France pointing to the Atlantic Ocean, to the English Channel, what we call La Manche. And one of the ways to disable those cannons is to fly at night, parachute troopers behind the enemy lines and to disable it. Price has closed, I'm done with the history, price has closed right at this level. Right at this level. It's a night times, German gunners manning those cannons are fine asleep. Little did they know that the first thing in the morning, American troops are behind their backs, executing them and preventing them to fire the cannons on the landing troops. This right here is what has happened between the two price action. Wednesday price action versus a Thursday price action. Okay, let me see if I can do this quickly. I'm going to go again in my notes and I'm going to pull up the notes from a Thursday morning. And this is a Thursday morning, and let me just see if I can share with you the FinViz snapshot that I took of that morning when we were trading. Okay, there it is. I found it. And I'm going to share this with you. I think it's helpful that I do these things so you kind of recognize what has caused this thing. I'm going to put it down here so I don't confuse the two things. So I'm talking about this particular area. This is the area that I'm talking about. Let me make it maybe in orange. That you are not having the recollection what has taken place, but because I'm looking at the FinViz all the time and I'm taking the snapshot. Here it is. That's that May 26th, Thursday morning. Did the price action leave the gap or did it not? Yeah. So that's mean the airplanes have flown from United Kingdom over La Manche into the French territory at the night time, have released the parachute troopers, and were able to disable the Germans who are manning those cannons, and then landing took place. What does that have to do with stock market? Big institutions at the night time had traded futures above the levels that normally in regular trading hours, they wouldn't be able to push through. And then when the morning arrived, the D-Day happened, attack forward. This was called gap and go. When you look at it, what was the opening price right there? Was there a tick any lower? No. It went straight up. Now be aware of it. The Nasdaq situation was a little bit different. That's why I'm not looking at the Nasdaq. I'm looking at the Dow and S&P. But this is definitely manipulation by the big institutions to fool everybody out of their short position, so they have to cover. Now, when they need to cover, and this is a question for all of you present here, do you think the shorts that are covering, are they covering with the limit order, or are they hitting the panic button? Market, get me out. Market, get me out. Market, get me out. I'm going to just take a sip of water and wait for you to answer that question. Is it the market order or a limit order when somebody is covering their position, which they're dead wrong? What do you think it is? Excellent, Mark. It's a market position. And it was the same thing over here, ladies and gentlemen. Take a look. Thursday close versus a Friday close. But this time, I need to bring into equation what really happened to the NQ and how on an NQ it was on a Thursday into Friday that the institution did that cheating thing, like bringing in the airplanes behind the enemy line. So watch here. I'm pulling up the QQQ and I'm gonna now switch it to daily, so we will get. I mean, same picture. We're hitting the resistance. This on a monthly gives you so much clearer picture. Do not go bullish. I mean, are you out of your mind? I mean, trend is down. Look, this high versus this high is the lower high. We're still in downtrend. This is a short-term bounce. That's all it is. But go ahead, put the media on and just watch it. This should be poking your eyes. This is close on a Thursday and this is open on a Friday. Now, there's a number of things happening on a Friday, right? The big boys are already heading in Hamptons, and they're telling their miners, just make sure you keep on buying so it doesn't go down while I'm on my vacation or whatever. Now watch here. This is a trend line that was being intact from these 3 sessions. Are you recognizing this? So on Thursday, did we close through that trend line? Yes or no? And I'm going to again sip of water and I'm going to ask you, if you did not know how this thing looked here. So imagine this bar, then look. How would you then feel? Very good answer, very good answer. You would feel somewhat confident saying, this is a good place for me to go short because we are hitting the resistance, right? But don't forget, if you had learned anything from me in these sessions that you've been attending with me, not all the information is on one chart. That's why I'm looking at 30 stocks. That's why I'm looking 500 stocks. That's why I'm looking the NASDAQ 100 stock. And I'll come back to the Russell and talk about the Russells. But be aware of it. Not everything is visible on one chart. So what has happened on a diamond and a SPY as early as Wednesday into Thursday ended up happening on a QQQ Thursday into Friday. Thursday into Friday. So again, what is the logic here? The logic right now in the media is like, wow, watch this, like we have now taken out, and let me make this again in the yellow. It's a little bit more visible. We had taken out this particular level on a NASDAQ. It must be that all the technology is doing good, everything is going up. And I will go through the what I like to call the Fangman and T in the moment. And I'll tell you what I mean by the Fangman and T, because we're doing now the big picture, right? Could anybody guess what is that? Facebook, Amazon, Netflix, Google, Microsoft, Apple, Nvidia, and a T is mighty Tesla. I'll go through these charts just rapidly now before I wrap it up in these 15 minutes. and I'll ask you, okay, are you still feeling bullish? Because if you put the CNBC on, I'm sure they're gonna brainwash you into believing that it's all unicorns and butterflies and rosy days. And we are out of depression and recession, whatever, right? But let's finish up with IWM. IWM was the very first one that broke this downtrend. And IWM represents the 2000 stocks. So be aware if 2000 is a better measurement than only 500. And this thing has happened way, 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 way before anything else. So high, lower high, another lower high. And it was on Wednesday that we actually, with conviction, close above it. While on a Wednesday was SPY, Diamonds, and of course QQQ was lagging. Yes. And look where is right now IWM coming in from. Oh, I don't remember. What was that red line? Okay, why don't I switch on a monthly so you get the perspective. February 24th, low. That was a very significant day in the US stock market. Just like we had the Black Friday back in 1929, or we had another Black Friday in 1987 when the market crashed. That February 24th is very significant. Did we close above it, or are we parked right at the enemy's line? Right at the enemy's line. There it is. So after this move up, do we have a more oomph to go higher? It remains to be seen. It remains to be seen. But be aware of it. Now you have a different perspective on the whole life because you're looking at everything. You're looking at everything. So what I'm going to do now, I'm going to apply that thing that I did earlier, right? So we're going to add a study. We're pulling up the option. We are agreeing with 3 days, and I'm not going to be putting too many things on. Once when this populates in a moment, you just need to give it a little bit of time. You use a price scale to enlarge it. You can move this so you can get to the whatever date you want. And you're looking here at huge, 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 huge put action. Okay? And that's June 17. June 17. So when you're looking at this huge put action, your eyes can visually go down here to see what strike price this is. And that is a 185. Okay, 185. So be aware of it. On the Russell, there's a high chance that we are going to move from the current price down to the 187. Well, of course, we would need to look at the chart. Yeah, of course, we would need to look at the chart, but be aware of it. If I'm going to hit it, the one that has gotten ahead of itself the faster is the one who's going to come down the fastest. And in this case, notice they are not using July options. They are using the what? June options. June options. They are that bold that they're actually saying we are hitting it. Look, I mean, one more time, if I emphasize this to you, this is a 12,800 contracts for the June. So here I am in IWM. I'm taking the June, so that's mean I'm gonna get rid of this. I would need to add a lot more strike prices to see that level. So I'm gonna add 10 strike prices. I'm not gonna be on the call side, I'm gonna be on the put side, and I'm gonna ask you to look at the volume if there's anything poking your eyes, and then I'm gonna go to the option, on the volume map. That is displayed on a chart and ask you, is it easier to recognize it here or is it easier to recognize it off the chart? So there it is. I'm purposely drawing this slowly so you can see it. Now, is there another one somewhere that is huge? Yep, at the round number of the 180. Okay, $31,270. Now, why would institutions have those puts open if the market is going up? Because they know something. They know something. They know something. Okay, let's run to the Fangman and T. Why do I want to run through the Fangman and T? I want to run to the Fangman and T to apply the same logic that I had here on the diamonds, and I'm gonna then ask you, like, do you feel that bullish on it? Do you really feel that bullish on it? So I'm gonna be using the daily. Yeah, yeah, Joe, that 180 is actually bigger than 12,000. Bigger than 12,000. So just don't watch the TV. Whatever the TV tells you, that's I'm not gonna. I mean, uh, watch the open interest in the volume. That's what I'm trying to say. Okay, let's go Facebook daily. How's this looking to you? Oh, it's broken, but we are coming into what? That's all that I'm gonna say. Next one. Mighty Apple. What's this coming into? Same point as a Facebook, right? Netflix. Do I need to say anything about Netflix? Does this look bullish to you? G. We have a two of them. We have a Google and we have a Google. It doesn't matter. It doesn't matter. Well, you can call this anomality because it was a one-day event and it's outside. In the technical analysis, sometimes they call the island reversal. It's just like it's not even connected to anything that's going on. Gap here, gap down, back in the range. Doesn't matter that it opened here where it closed down here. So this is an accurate trend line because it's connecting the high with this wick high, with this and this and this. We gapped up, we left this gap, but look where we gapped into. Right at Fangman plus T, Facebook, Apple, Netflix, Google, and Microsoft. Strongest of them all, I must say that. I'm impressed. I am impressed. I'm less impressed. I'm even less impressed now. Why am I less impressed now? The more data you give, the more objective you are. Okay. Now, this is not as valid because it has a two touches. We can have a two touches for anything. The most valid trend lines are the ones that have a three touches. So this one, you should be looking here more than anything else. And where are we? There is a reason why these things stop where they stop. There is a reason. Another A in a man is Amazon. Amazon. This has a long way to go before we can make an argument that this is breaking to the upside. Where are we right now? But be aware of it. If I decide right now to switch this to the weekly, this is a bunch of chop. It's a bunch of chop. No, look how long we have actually spent in this. Oh, this is monthly. I was supposed to look at the weekly. Look how much time we have spent chopping in this area. This is really nothing else but just a chop. 4 weeks we've been chopping here. But boy, if you just look at one day or if you look at the smaller time frame, it's really, what's the last N in the man? NVDA. Those are the big names, NVIDIA. I shouldn't be looking at the weekly because you might get impressed with it. We should stick consistently looking at the same thing. Where are we coming into? In order to clear that, last time in that area, price action has spent basically half a month. Do you think we can clear this? You don't think there's a bunch of unfilled orders by the institutions that need to get cleared up, like either way, up or down, before this thing goes? It remains to be seen. Fang Man, this is N, and then T, Tesla. Now, Tesla has been driven by what's going on now with the Twitter, so maybe we're going to look at the Twitter as well. I'm going to now point out to you that this is the two touches right here. We still have a long way to go. This other trend line, it's irrelevant because it got broken, but look where we're coming into. And last but not least is Twitter. Gaps. Right here, we're coming into another one. But overall, the trend is. So how do you feel about the market now? Take a moment to type it in and tell me. I hope I brought a dose of objectivity, realism in it. I'm not saying right away, first thing Tuesday morning is going to be whatever, but I would not be surprised if you come in Tuesday morning and there's a 300 Dow Jones dollar gap down, and from then on, this market goes gap down and go down. I mean, this is very, very volatile market. So we have some long positions, we have some short positions, as I was showing to you in our Thinkorswim account. We have some positions that are long, some positions that are short. So this XLC that we bought for 72, we're definitely wrong at it because now it's worth 60. So that's $12 lost on a single share. On a VST, we got in at the 25.29. Now it's $1 up, but we had a delta that is so low on that put, so we only made a 20 cents delta because we sold the put. We want that put to us. And on this XLE, that was the last session that we did extremely well. We made $1.34, which means overall that position is doing good. So thank you once again for your participation. The biggest thing that we did today was actually expose you to the concept of the volume that is a study that you can have on a chart rather than digging it on a chain, and it's a little bit more interesting on that. Joe, I really want to talk about the open interest, but could I do that during the live session? I really feel like using the volume for a sharpening session makes perfect sense, but in a live session, using the open interest makes more sense, right? Mark Jones said, wow, I think I need your guiding before the open every day. Well, I don't know, maybe I'll talk to Jose and see if it's possible to move the sessions earlier, or whatever, like it's a discussion that needs to take place. But maybe shoot an email to Jose. I'm going to have a discussion with him. Maybe sessions in the morning would be good. Because most of the time, really, when you look at it, what is the market doing? Market really moves that first half an hour more than anything else. So I'm bringing here FinViz just to kind of show to you. This is a FinViz, and if you missed that first hour, which was again gap and go, the rest of the session was like a nothing, and then in the last hour again there was a move. So you can trade a morning session, you can trade a morning session. You know what I mean, like an opening session, and you can trade the last hour, right? So anyway, thank you once again, everyone. I really enjoyed this session. I hope you recognize the value of that tool that it's patented on our platform. When you go down here and you click Add Study, from all the studies over here, only few of them are patented. Of course, Automated UFO is patented. And then another thing is this option volume map, because I don't think any platform out there has ability to display this. And I personally think in our community, it's completely underutilized. So I hope this was valuable for you, Joe, for you, Mark, for you, Jeff. And I would suggest watch this with the two monitors. And the reason why I say watch this with the two monitors is so you can mimic the steps that I did, So when you click this, you get this thing and you say, okay, I don't want to look at the contract. I want to look at the open interest, right? Now be aware of it. When you click apply, it's going to be right away open interest, right? Because now the open interest is going to be applied. And then when you click on the open interest, please single right click, because when you single right click, you're going to be getting the different things. So once again, thank you for your time. Watch this, rewatch it, and give the like if you want. It always helps the community. And I'll see you, I guess, next month. Stay hedge and bye.